Hey, welcome back to Business 101, Introduction to Business, and this now is our last video in the module on accounting. Yay! And in this particular video, we're going to try to seal up the entire chapter with the topic of accounting and ethics. Remember, this is sort of the way that we started talking about accounting, the need for accounting, and then we talked about some of the ethical violations that led to important pieces of regulations like Sarbanes-Oxley. And so now we take a good hard look at how accountants move forward in today's world, considering accounting and ethics. And so we begin this discussion acknowledging that the Code of Professional Conduct for all accountants is a code of ethics for CPAs maintained by the AICPA, the American Institute of Certified Public Accountants. This is a rock-solid code of ethics. A violation of this will cause you to lose your license and your certification. This is big stuff. And of course, nowadays, it needs to be because of some of the things that we've seen in business history. So you can see some of the highlights that we get from the Code of Ethics for CPAs, that there are hard-coded responsibilities as a professional. A professional public accountant, a certified public accountant, should exercise their duties with the highest level of morality and in a manner that is sensitive to bringing credit to their profession. That they're serving the public interest and therefore should have a commitment to the profession by respecting and maintaining the public trust. This, of course, underscores the integrity that is necessary for this profession especially to produce analysis, results, and reports that can be trusted by any kind of an audience with the highest regard for integrity, sincerity, and honesty. More, it is required that CPAs be objective and independent, and therefore independency meaning avoiding conflicts of interest with your clients. You should remain independent of what your clients would like and hope their financial statements to say, but rather you should have enough independence and autonomy to be able to state the actual truth, the honest truth in the reports that you generate and certify. Therefore, you need to maintain technical and ethical standards through due care, through professional improvement, by abiding by ethical standards, by continuing accounting education, all those kinds of things. And finally, last thing in this table, professional conduct in providing services. In other words, you need to abide by both the meaning and the intent of the Code of Professional Conduct published by the AICPA when deciding on the kinds of services and the range of actions you will agree to supply to your clients. So in this last table, I want to give you some reasons why we major on ethics when we talk about certified public accountants. Why? Well, some famous unethical and illegal accounting scandals. AOL inflated ad revenues to keep their stock prices high, both before and after merging with Time Warner. Freddie Mac, the big mortgage giant here in the United States, fraudulently misstated $5 billion in earnings. $5 billion in earnings. HCA and later Columbia HCA, this healthcare association defrauded Medicare, Medicaid, and TRICARE through false cost claims and unlawful billings. They were found out and they had to pay over $1.7 billion in civil penalties. Tyco, remember Tyco, a name that we started out our discussion about Sarbanes-Oxley. Yes, the CEO illegally used the company funds as his own personal piggy bank to buy expensive art, as well as using the company money to privately and secretively pay for his wife's birthday party to the tune of a $2 million birthday party. I don't even know how you throw a $2 million birthday party. But he paid for it fraudulently out of company money. As a result, Kozlowski received a 25-year prison sentence. We talked about that. The company Waste Management overstated income in financial statements. WorldCom hid $3.8 billion in expenses. I'm going to repeat that. $3.8 billion in expenses in order to show a false profit instead of a loss in their annual income statement. Why do we close this discussion of accounting with these kinds of examples? Because it is easy for unethical people with the right access to lead a number of people astray, including Wall Street and investors, by unethically misstating and hiding the true facts. We cannot have this in accounting. It's that important because too many people rely upon accounting as a profession that gives honest, full, complete, transparent disclosure of financial performance for us to make wise investment and managerial decisions. This then really is the role of accounting, to tell the story behind the numbers and to tell it honestly, truly, with integrity, so that managerial decision makers and investors and the general public know what they're getting into. This then concludes this 10 video series on the topic of accounting. Make sure you look at all the videos and the content in the textbook. Hope this was helpful. We'll see you in the next module.